into the economic calendar for the week, and then we're also going to get into a lot of different stocks that I'm looking at as potential trades, and you guessed it, most of them are going to be shorts. So in this video we're going to be talking about Tapestry, TPR, Dash, Fortinet, FTNT, Rocket Lab, TRGP, Uber, Palantir, Starbucks, App, which is AppLovin, Visa, ASTS, Netflix, Hood, Snow, Meta, Roblox, Nvidia, and yeah, we're gonna be talking about all those, and we're gonna be talking about economic calendar, FOMC minutes on Wednesday. Thursday we got CPI month over month, year over year. We got inflation rates month over month, year over year. CPI is supposed to tick up by 10 basis points month over month. And luckily, core inflation is supposed to tick down by 10 basis points year over year. Let's hope that comes in line. Inflation is supposed to continue to come down. PPI is supposed to be up by 20 basis points. And then Michigan consumer sentiment is going down still. And that's Friday. So that's your economic week ahead. So basically Monday and Tuesday, you kind of got free range to be a trader and to do what you want without being scared of anything. Wednesday, you have the whole morning, and then obviously lunchtime's tough to trade because volume dies down. So you got the whole morning on Wednesday to be a solid trader, and then you could see FOMC minutes, ruffle some feathers, or start cooking this market to the upside for a rally. And then obviously Thursday and Friday, that's a lot of landmines right there. Pre-market 8:30, pre-market 8:30 for two big numbers, and then 10 a.m. for Michigan consumer sentiment. On Friday. Thursday and Friday are going to be tough. Might see a lot of chop, so just be careful out there for my day traders, for my long-term traders and swing traders. Be aware of these things, and just be ready. All right, so let's talk about some charts, and let's talk about some stocks that we are seeing here. So Tapestry plunged along with Dollar Tree and Five Below and so many other stocks that get a lot of manufacturing done out of China, sweatshops, and especially Vietnam. And they got smacked with tariffs. And so those stocks plunged, 15, 20% craziness, 10%, craziness in just a week. And some of them just in one day. So very bad stuff. They got cratered. I watched this name, and perfect head and shoulders here. You got your shoulder, head. You got your neckline. It just smacked down right through that. It also cut right through the 25-week moving average, and now we are sitting here, down a bit. But what I want to see is a retest. I want to see a retest come back up here to $68. I'll nibble in 1/3 position. And then I want to see a rejection, obviously. And then at that point, off the rejection, then I want to get in my other 2/3 position. And you can see it better on the daily. And I'll be honest, like this could be already over because we broke down through it. You also had this trend line right here. We broke down through it. We kind of did retest it with this wick, possibly that could be a retest. But if we do get a rally this week, we should be able to come back up here, get a good entry up here, get a good another good entry off the rejection, confirming. And then guess what? We have a gap, and gap. We got all these gap fills. So it looks really good. You got a gap fill, gap fill, gap fill. So this thing could absolutely crater, and you could be looking at a 30% gainer or more. If you get a good better entry, you could see 32, 33% gains. And you can ride this thing down to the 200-day moving average, take some profits, let it bounce, and then continue to, ride it lower. You got a nice volume shelf here. You got a volume shelf here that if it breaks down, then you got to move down here to about 50s. You get another move down here to this volume gap at 45. And this is just a name that's kind of like shot up, consolidated, and then shot up again. And now it's revisiting, and then revisiting, consolidating, and then, it could just crash down here to revisit this last good consolidation period. So yeah, this name's looking really good as a short. I do want to see a snapback though, pull back up to here, and then a move down before I do anything. Obviously bearish high five daily or high five swing, and then most important here, we have a bearish cross of the weekly high five, the long-term high five. We have a bearish cross here, and that is very, very bearish for this long term. And you see it's just been up, up, and away, and now things are going bad, possible recession. That means people spend less money on tapestry products, Kate Spade, all that kind of stuff. And so where's that? You just look at this chart and you say on the weekly, where is the closest consolidation point that was really good support? Well, right here. And again, that's all the way down to $45. And that obviously, like I said, gives us all those gap fills that we were looking for. So very good name here. I just want to retest, and then I want to get in this name and ride it lower. So that's number one. We're almost down here at the green support beam as well. And then I think we could just make a Williams consolidation box, and just continue lower. So yeah, that's the first one. Next one up is Dash. You have an expanding triangle pattern, right? You broke right through that. Now what I want to see is I want to see a retest. Let me get a retest here. I'll start a 1/3 position, get on the retest, get my other 2/3 position on the follow through, the rejection of the retest. And then you see we have all this where we didn't build any support. We have some consolidation here, some consolidation here, and some consolidation here. So I'll be looking for that. And our measured move of this expanding triangle is 32% gain down to about $116.16. If we go over to, well, first, yep, we're also at the green high five support beam. And like I said, this is why I think we'll get a bounce here, because we are here. So we'll get a bounce to form the Williams consolidation box. We'll get a bounce to form that rejection point. Then we'll have our top and bottom of the box. And as long as we stay within that Williams consolidation box, we'll continue to the downside, continue to print money on this name, whether it's options, whether it's shares, shorting them, whatever it is. So, and then also we have a bearish cross. And this is on the weekly, guys. When you get these bearish crosses, you better you better look. You better look out, okay? You get a bearish cross, you go down. You get a bullish cross, you go up, and you continue to go up, right? I mean, just looking at this chart right now, if you would have took this bullish cross, that you went from, 78 up to 142. So you almost doubled your money. If you took this bearish cross, then you went from, 120 down to 98. So you made about $22 per share that you shorted. You bought this bullish cross. You got this at about 116, and you could have ran this all the way up to about 215. So you doubled your money again. Now you got the bearish cross. What are you going to do about it? You know what I mean? The only one that really didn't work out too well, and it still worked out pretty well, is right here. You got in here, you bought in at, say, 78, and you sold at 69. So you got $10 on that. But winner, 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 and this is going to be a winner. So I think it could come down a lot. So yeah, just got to follow the trends. Just got to follow the trends, follow the high five trading strategy. Get a charting pattern, get a bearish cross, got a volume shelf that we're going to fall down through this volume gap all the way down. 160.19 of price gap, 133.91 is a price gap, and then we have a measured move all the way down to 116 for a 32% total gainer. We got a bearish Williams percentage range. Looks really good. On the daily, you see, like, I just want to get a snapback up here to retest and then follow through. But you see it, gap, gap, and then consolidations down here to break through. And you're gonna get stuck up here as well on the 200-day moving average, just a little bit. So, all right, next up, 40net. 40net, you can see it clear as day. Shoulder, shoulder, head, neckline, big breakdown. Big breakdown. Now that we got the big breakdown, right? We are inside the we're inside the green support beam. So what do I want to see? I want to see a Williams consolidation box formed. Let me get a Bears-Williams consolidation box formed so I can ride this within it and then ride this more to the downside. I'm not getting in here. Why would I get in here? This is so much risk that we could come all the way back up to retest this area. So I'm not getting in there. I'm going to wait. I'm going to wait until the time is right. And if it doesn't come, then I don't care. I want to bounce up here to around $92 to $95 per share. I want to get 1/3 position there. Once we reject, I'm going to get another 1/3 position, and then maybe somewhere down here, if we engulf this, I'll have my last 1/3 position. And I will ride this thing lower all the way down to this area. So take it from, 90s down to 60s. And that'll be a great short as well. On the daily, you can see it a little bit better. Neckline, left shoulder, right shoulder, head, broke down clearly through. We gapped right down. We're right at the 200-day moving average. So we can easily, at this point, in my opinion, 200-day moving average are pretty stiff support. So we could easily bounce back up here to fill this gap, to retest here. And then who knows, we could even, overshoot this and fill this gap right here. So I would make sure if I entered this that my stop loss would be above that gap as well, because I don't want to get stopped out just from the gap fill. And then from there, we shoot down. So again, 1/3 position here, another 1/3 on the rejection, and then another 1/3 once we break through that. Get that position fully built out, and then ride this thing lower to get those price gap fills, get through those volume gaps, and also get down to our measured move of about $64 per share. Next is Rocket Lab. Rocket Lab, we have a, what do we have? We had a rounded bottom that we are now back to and perfectly retesting. So, you really got to get through this area. This is a very stiff area because it's a retest of this previous resistance that got kicked down. And now we broke through it, and now we returned, and we once, twice, thrice have hit and wicked off of this area. If we break through this area, it is big, big trouble. This is just up, 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 and away. And then we finally got a pullback here. We're below that. So with that being said, our only support after we break this area is literally $10. $10 is our next support. And then after that, it's $6 to $7. And guess what? I know a lot of people love this company, but they're losing money and they're making $132.39 million, not billion, $million a quarter. And they have a $7.42 billion market cap. So I know a lot of people like this for the long term. That's fine and dandy. I'm just talking about short term. I'm talking about trading this name. It looks like a great trade setup. If we can break through this area, it keeps on getting kinks in its armor, and if we break through this area, then it's a big uh-oh. If we go over to the daily, we can see it a little bit better. So we had this key area up here that we broke through. We came down and actually filled this gap right here. So that gap's already filled. What I want to see is, I'm not even going to play that. I'm not even going to play this because of this right here. I'm not playing that. If we break this $15 low, then I'll look to get in this name to the short side. If we don't, I don't want it. Because this right here, it can come up here and retest that, and that's fine and dandy. But to get down here to 11, we have to break that key $15 area. That's also where the 200-day moving average is. That's tough. That's tough. So just so you know, that's going to be a tough one. And I'm not going to get in that unless the stars align. TRGP, Targa Resources. It's a utilities gas distributor. You don't got to know the stock to be able to trade it, guys. I don't know jack about this company. But what I do know is it has just soared during 2024. 2024, it went from $80 all the way up to over $200 per share. And with that, we have an expanding triangle pattern bouncing around in there, and then it just cratered 18.52% this week. I want to see a bounce here. I want to see a bounce back up here to about $180 to $185. 1/3 position will be built. Then I'll get another 1/3 off the rejection, and then another 1/3 off the close below the low. Have my whole position built out, and I'll ride this thing down to 129.58, which is the measured move of this expanding triangle. And then I'll look to bring it down here to about 110 to 115-ish for this consolidation area. And then all the way down here to this beautiful large volume shelf down here at about $88, $89 per share. And obviously we have a bearish Williams or bearish high five indicator on the weekly, and yeah, it's just pointing straight down, guys. So if we can just get a retest here, I would love to get in this, build a Williams consolidation box, and we will be good to continue to ride this thing down to the downside. On the daily, you see a little better. It's also head and shoulders, and we cracked right through that. So like I said, get a pullback up here, or maybe even fill this gap, 1/3 position here, and then get another 1/3 position off the rejection, and then continue down. And yeah, the measured moves all the way down here to 129, and then go lower than that too. So all right, Uber's a little bit of a tough one, but head and shoulders here, it's kind of messy. We would need to break this area down here. I'm honestly probably not going to do anything with this, just to be totally honest. Uber's so undervalued to me already that shorting it would just be very, very dangerous. It could 100% come down to $50, 100%, and come back down here to retest. I just don't want to take the chance that it will, because it's already a beaten down name this year. So, and if you just see this, it's just been consolidation, consolidation, consolidation. All this is consolidation. So this is basically just chop. I want defined moves. I want this thing like a peak out, and then I want to bring it down. This is just all chop. So we'll just move on from this one. It's tough. You see the high five indicator just keeps going back and forth, just a squiggly little line that can't get a trend, can't get a direction. So I'm just not going to touch that one. I'm going to delete it from the watch list, actually. All right. Palantir. Palantir, one of our community members called this one out today, or this week, and looks great. We'll go down to a daily. Looks a lot better. But basically, you can see shoulder, shoulder, head, and we kind of have this diagonal neckline. Well, guess what? We broke out of that diagonal neckline. The measured move is just too crazy to even fathom. I mean, the measured move is like, it's just wild, honestly. It's like $20. I don't see it. I don't see Palantir going to $20. I don't. Nope, I don't. Unless we get .com crash, Palantir's going back to 20 or less. We get housing crash, Palantir's going to 20 to 20s, probably 30s. 2022 crash, probably getting to 40s, 50s. So, yeah, I'm not in the camp that we're gonna get that measured move of that. And it's not the cleanest. It's not the cleanest head and shoulders. So, but we do have a bear flag as well there. Did break down of the bear flag. Measure move for that is $60.92 for the measure move of the bear flag. We do have this November 2024 gap fill down to $42.21. So we could see that because we just shot up here, didn't build any support in here. So all the support is right here. If we break this support, then we will come down and fill this gap, in my opinion. And we have this nice volume gap as well. And yeah, bearish high five cross. We haven't had that in a very long time. Since April 2024, we had a bearish cross, but then instantly went back up. So these have been short-lived. and the run-ups have been long-lived, more so. But that's just because Palantir is a very volatile stock. But this one just looks different. It looks like it wants to come down to 66, 58, 45. And so you know, 45 is key because we broke out of this previous resistance, then we broke out of that, ran all the way up, and now I do believe we'll come all the way back down to retest this previous resistance and flip it into support. But you just got to let it play out. And again, see, Williams consolidation box broke, gave you a fake out, and then it dropped. So yeah, this one looks good as well. Just, it's a hype name, so just be careful shorting this name because it could go right back up very fast if any good news comes out. Starbucks, bearish cross here, and the move's pretty much, yeah, we need to have a bounce back. I want to bounce back up to $92, $93-ish, back up to the weekly, 200 weekly moving average. Let me get a bounce up here to $92 to $94. Build this Williams consolidation box. I'll go in short here because on the daily, you kind of see this head and shoulders, not the prettiest again. You could also sit here and say expanding triangle, right? Again, not the prettiest. What I will say is from the July 2024 lows, we were in this uptrend. We hit all this, hit it again, rejected or bounced, hit it again and bounced, and then we created right through it. So we are not in an uptrend on Starbucks anymore. We were in a downtrend. But I will say again, you know, the move's already done. If you need to get into it here, and you could have wrote it down for about 15%. This one's probably done. So take that one off the list as well. App loving. Man, I would have loved to be in this one from up here. Wow. I mean, it just from $521 down to $219. That is just sick. Just double your money quick in a few months. Crazy move. Just so you know, all this, they didn't build any support. The last consolidation period was down here at 100 or less. The last consolidation period was at 100 or less. You see, at 100 or less, we had some red candles in there, some red months. Guess what? From September 2024 until November 2024, we didn't have any red weeks. We just went up and up and up. So all this is at risk of just giving it all back because there's no support in here. And we could go from $219 down to less than $100 per share on this name that was once $520. If you don't think these things can happen, look back at 2022 at some of the companies that were $700, $800, $500, and they are now $16. They are $12. They are $100. They can crater stocks so easily if they don't have the real fundamentals, if they're not a great company that deserves the current valuation. So this one, yeah, this one's on my radar big time. If we drop down here to the daily, we are right here. We are right here at the 200-day moving average. Here at the 200-day moving average, we had this resistance line, or we had this support line drawn across, right? We kind of have a head and shoulders here as well. Again, not the prettiest. You know what? You can call this a bear flag. Call this a bear flag. Take our measured move, drop it down here, boom. We got to move down to about $156. So we got plenty of room. This is we could still, if we bought in right now and we actually got down to our measured move, we got easy 29% in profits. But here's the thing. I want less risk. Less risk is better. So what do I want? I want a snapback. I want a pullback back up here to about 240 to 254. Give me a push back up here, a bounce off this 200-day moving average, build out this Williams consolidation box, which is already built out. You already have your support there. So let me get a bounce up here, hit here. I'll get in, and then I'll ride this thing down to 156, and then maybe even down here to about 100, which would be nuts. You have this price gap fill all the way down to 177 as well, that I think will fill at this time. So yeah, another great name. Bearish flip here. You know, we got a bullish flip, and you were able to ride this thing so high, and now we got a bearish flip, and I think you're gonna be able to ride this thing so low. Visa broke the uptrend here, as you can see. Broke the uptrend from July 2024, completely broke it. I want to see a retest of this, and then I want to see a further fall. And if we get that, then I'll get in. 1/3 on the retest, and then 1/3 on the rejection, and then another 1/3 on the close beneath that. And yeah, this one's just been up and away as well. You got gaps to fill here, here, here. Yeah. And you basically got all the way down to here. You got all the way down to like 290. If you break this area of support, then you got this big area of support. And I don't think it really gets through that, the 276 to 290. Yeah, I just think let's get a retest up here, and then we can ride this thing down here and then call it a trade and then move on. ASTS broke out of this resistance, support, retested, support, retested, support, retested. Support is being retested again. If it fails, buckle up. We have all this room to fall. We could go easily from $20 down to $5.50. We also have this gap fill down here at $5.42. And then we have this support here at about $5 to $7. So yeah, if we break this, we could easily crater down. So I'm looking at that. On the weekly, we were getting a bearish cross, and yeah, just a lot of up and away weeks, guys. Like when this happens, it doesn't take much to crater us down back to here or here to previous support. You see we had this massive volume gap down to about $10. All right, Netflix. I'll be totally honest. I am probably not going to take this trade. If we do have a recession, that's really good for Netflix. If people aren't going out and about, and they're spending less money, and they're going out to bars less, they're going out to eat less, they're going out to do activities less, they're not going to the amusement parks as much, they're not going out and doing as many things. What do you think they're going to do in their house? I'll tell you what I would be doing. I'd be watching Netflix, the best streaming app out there. The winner of the streaming wars. I'm going to be watching Netflix. So that means they're going to get more subscribers, more people paying for their ads. Yeah, more people paying to show ads on their cheaper one, cheaper subscription. Like, it's just like, I really hope Netflix craters down to 700. I want back into this company. Please let this head and shoulders take place, so I can then take this and get down here, this measured move, and get in between 600 and 700. Please let it happen, because if it happens, I'll be buying down here like a madman, because they're going to make stupid money in the next recession, and they're running their business so well. I just think right now at this point they're overvalued. You can take the trade if you want. I'm not taking it based off what I just said, because I don't believe they're going to get hurt during the recession if we have one. And I'm not really looking to play that game, just to be totally honest. So yeah, but it does look like a pretty good short, all the way down here to 594-ish. That's the measured move, the inverse, or the head and shoulders. No inverse anymore. We are in down territory. Hood, bearish, cross. And, we're kind of right at this not a cup and handle, but rounded bottom, key support area. So unless we really break down through this, you know, we're not going to go much lower in this name unless we break down through this. If we do, then we could see 25 next. And then after that, 20. So think about Hood. A lot of people are getting liquidated. A lot of people are leaving the markets forever, and that's going to show up in their next couple quarterly results. And with that, you know, people are just going to sit there and say, you know, a lot of people are going to give up on the markets with how bad it's been. You know, a lot of people lost a lot of money. A lot of people got margin called. A lot of people are going to give up on these markets. And when they give up on these markets, Hood is going to lose clients because they are tailored to the retail investor, a lot of gamblers, a lot of people that don't know what they're doing. Very, very beginners, you know, so they easily could get down to 20, 25, 15. You know, if they really start losing, you know, clients, they really start, not clients, but they really start losing people. Yeah. And get bad real quick. But yeah, bear flag here, head and shoulders broke down out of both of those. For this short, I want to see a retest up here at about 38 to 40, and then we can go ahead and follow that down to about 25. That'd be a good 36% trade right there. So yeah. Snowflake. There's more room to go down here to like 107 and stuff, but they already filled this gap, so this one's already over. That was a good trade. Let's see, Meta, head and shoulders just absolutely broke down, retested right here, and then created right through that. Now they're all the way down here. The measure move, the head and shoulders is down to 410, 411-ish, so I do believe we can get down there. So you have the measure move at 410-ish of the head and shoulders, and then you also have a gap fill that's or a price gap fill that's unfilled from February 2024 after earnings. So you can also fill that. So yeah, with a price gap fill and a measured move, the probabilities are very likely that Meta actually does get down there. I want to see a snapback back up here to retest the breakdown area. I don't even need to retest the breakdown area. I just need to get back to this like 548, and I'll be more than happy to enter this trade and then draw it back down here, take some profits, and then hope that it goes down to 410 if the markets continue to fall. Roblox, head and shoulders, bear flag, and then it just cracked down. So it broke down, then had a big retest. It overshot its retest, and now it shot back down. I do believe that it could still come back up here to the top of this bearish channel at about $56-ish. Come back up here. I'll be more than happy to get in and ride this thing back down to 52.50, 50. Fill this price gap here down here to 43, and then maybe even all the way down here to this measured move of $39 for a 32% return on your trade. And Nvidia, this trade's done. I was in this, I got out due to having to take my son to the hospital, and yeah, it was a mess this past week, and I just decided to get out of all my trades. They all ended up working out, which sucks, but I don't care. Like my son was, we had to take him to the hospital. A bunch of stuff happened. Like I had to be there for my family, and I could not be in trades, and I cannot be thinking about trades when I should be thinking about my son and my family. So I just completely just exited out of all my trades, even though they were all still good. You know, I was in Roblox, Nvidia, Meta, or not Meta, Roblox, Nvidia, Snowflake. I was in all those short side. But again, I exited them early, but I couldn't be focused on that. I had to be focused on my family. I had to be focused on my son, making sure he was okay, making sure he had what he needed. So I just, like I told the community, I just totally exited everything, and that was it. So yeah, but this thing has been perfectly in this bearish channel and just down and away. And now we're at the bottom of this bearish channel. We're at this key support and resistance zone. If this does break, then yeah, you could see down here to 75, 80-ish. But honestly, like I mean, it could get ugly. It can get ugly. Like it could go down to 50, guys. It can go down to 50. That's crazy. But that's like the best consolidation period and like support resistance zone after this one here. So it can get ugly. We'll just have to see. But yeah. Though we're not really gonna trade Nvidia just because it's already moved down so much. If it breaks down out of this support area, then I might look for a retest and then get in this thing to the downside, because obviously if we do go down to 50, I mean, that could be a huge, 44% move. So awesome. Cool. Appreciate all of you guys tuning in to the end. That's all the trades. That's my thoughts on the markets. That's what I'm seeing. Lots of good trades out there, but we had 2 back-to-back huge down days. So you shouldn't just be jumping into shorts thinking like, yeah, we're just going to go down 5%, 6% every day. We could, but at the same time, the chances get less and less likely that's going to happen. And this week, I do think we are going to get a 5 to 7% or 4 to 7% bounce to the upside this week into next couple weeks or so, depending on, it might take a little bit or it could be really quick. So yeah, I do believe that we're going to get a relief rally here soon. And then I think we're going to be going back down to the downside. During the relief rally, that is when you should be looking for more companies to short. That is the time to be looking at them to short and getting in them, not right now after 11% down in 2 days on the QQQ. That's not the time to be looking at this stuff. I hope you enjoyed this video. If you did, leave me a like, follow, subscribe. Thanks for all the community members that are always watching all of this stuff to the end. I hope this gives you value. I hope this continues to help you improve as a trader, as an investor. And if you want to join our awesome community, the link's in my bio below. Thanks, guys. Hope you have a great rest of your weekend, and I'll catch you Monday.